You can build a profitable trading strategy with only 3 bars. No profit target, no stop loss, no filter. Sounds crazy? Well, stick around because I'm going to show you how to do it. So let me show you what I mean by 3-bar pattern. Here I have 2 patterns. Pattern number 1, the close is lower than the previous close, and yesterday close is lower than the previous close. So basically we have 3 lower close in a row. Now I draw here 2 different examples. You can have many more, but just to drive the point, you see this bar is down and the highlighted yellow here is the close. So this bar is down, this is the close, this bar is up, this is the close. Yet, even though 2 bars are down, one bar is up, but we have 3 lower close in a row. This is the same pattern, even though all bars are up, but we have 3 lower close in a row. So you see, even though we have this equation, this could show up in a different way. In fact, there are multiple ways to show this. I only drew 2. And here I have pattern 2, which is today's close greater than yesterday close. And yesterday close is lower than the close of 2 days ago. And again, here 2 bars down, 1 bar is up, but the close here is lower and the close here is higher. Same pattern, 2 days are up, 1 day is down, but the close are lower and this close is higher. So you see, this is counterintuitive when you look at it, but in fact, it's the same equation. Now, with 3 bars, you can only have 8 patterns. Doesn't matter how you draw it. At the end of the day, there are only 8 patterns. If you are an engineer or a programmer, you can easily get your head around this because it's either 0 or 1. If the close is higher than the previous close, that's 1. If it's lower, that's 0. So then we have 3 digits, and it's base 2 to the power of 3 is 8. Anyway, you can only get 8 patterns out of 3 binary digits. You see, most traders fail because they don't understand the fundamentals of matching the strategy style to the market characteristics. Now, I've done many videos about the subject, and you should know by now that the S&P 500 usually works really well with long mean reversion, natural gas, short mean reversion, and the VIX short breakout and mean reversion. And just by using this knowledge, we can easily now combine it with a simple pattern to make a profitable strategy. So first of all, let's look at our base. So here is the S&P 500. Like I mentioned, the S&P 500 works really well with long strategies and mean reversion strategies. By the way, these are not the same. You can have a mean reversion short strategy. Here is our base. We are buying every day the open, selling the close. What do we get? If we do this since 2006, it's 4,400 trades on average, making $21. And our win percent is 54. And that's, again, it's just a proof that yes, the S&P 500 tends to drift up most of the time. So if I do this every day, I already have a higher percent of winning than losing. And on average, I'm making money. Now, there's no commission and slippage, so this is a losing strategy. And here is our optimization for the 8 patterns. So 0 is our original strategy where there are no patterns. And as you can see, we are making $21 on average, more than 4,400 trades. And now we have these patterns. So pattern 1 is 3 down close in a row, and the close is compared to the previous close. And then 8 is 3 up close in a row. So today close is higher than yesterday, and yesterday is higher than the 2 days before. It's clearly the pattern has an effect because look at this. So here we are making 1, here we are losing 33. We are losing 43, and here we are making 118. Look at the discrepancy here. It's huge. So if we have 3 lower close in a row and we buy the next day and we exit, so we're only holding 1 day, we're already making $118 on average. So this is really, really good. Trades analysis. So this is not a fluke. This is an edge that we can find. Now, remember, we are holding for 1 day, so we can easily extend that. And let's try a number of fixed bars. So here is the optimization using that same pattern, but now we are holding from 1 to 10 bars. So instead of exiting the same day, we are holding for more than 1 day. And if I sort by return to drawdown, we can see 2 bars is the best. Not only it's the best return to drawdown, it's also best amount of money that we can make. And this is counterintuitive because if you think about it, holding more days should result in more money. But because this is a mean reversion strategy now, because remember the pattern is what? The pattern is 3 lower close. That's a pullback and we are going long. So it's a mean reversion strategy. And usually mean reversion strategy does really well short term. So this is the strategy performance. Our average trade is $530. That's amazing. 61 win percent, $118,000, 2.4 return to drawdown. Now remember I told you we will use the natural gas because we already know natural gas works well with short strategies. So this is natural gas and we are shorting every day and exiting end of day. So we are shorting the open, exiting end of day. This is what we get. 4,400 trades with an average of $75. Already we are on a good start. And that's what I mean by matching the strategy, direction, and style to the instrument. As you can see, we are already ahead of, 90% of other traders who are trying to build strategy. And now let's test the pattern. And 0 is our original strategy. And again, we have 8 patterns. And let's look at the average trade. So average trade 76. And again, here we have a huge discrepancy between the patterns. That means the patterns are doing something. Look at this one and this one. So number 8 is 3 higher closes in a row. Again, this is acting now as a mean reversion. So we are pushing up, and as a mean reversion strategy, we are shorting at that point, and that's why we are making a lot more money. And look at this. The average trade is 200 already. And pattern number 7 is making more money, but a little bigger drawdown. And pattern number 7 is 2 higher closes, and then today is a lower close. So that means it's like we are confirming the short is happening. And this is now the strategy with pattern number 7, but now the holding period is from 1 to 10. And sorting by return to drawdown, we find 7 bars is the best result. 10, 8, 6. So this is definitely different than the S&P 500. Holding more bars does result in a better return to drawdown ratio. And also, it makes more money. Now, just to show you that all of them are good strategies. Look at these average trades. So the lowest is 319, the highest is about $1,000. So all of them are doing really, really well. Doesn't matter what you pick, how many days you hold. So all this happened because we started with the right foundation, matching the strategy direction and style to the right instrument. Because if you go willy-nilly trying this pattern on any market, yes, sometimes it will work, but sometimes it's not. But starting with the right foundation, you can easily get to a profitable, robust strategy. Now, of course, the icing on the cake is you can combine all these in a portfolio. And like I mentioned in the beginning of the video, I told you we are going to use the ES long, the NG short, and also I'm going to use the VIX. And the point I'm trying to make is you can combine all these to lower the drawdown and add your profits. And that's the whole point of trading a portfolio. So here now I have 3 strategies. One is on the ES, another one on the natural gas, and another one on the VIX. Natural gas and VIX are short and the ES is long. Now, if you remember from my other videos, the ES is inversely correlated to the VIX. So you would think that the ES will be highly correlated with the VIX. Let's see the result. This is the result of our portfolio. We are trading one contract, no slippage and commission. Let's see, we have about 8,000 trades. Now remember, two strategies are short, so we have about 888 trades on the short side, 231 on the long side. On average, we are making 430 on the short, 500 on the long. So very good average on both sides. We have only one losing year since 2006. And breakdown, the ES making 120, NG making 260, the VIX making 125. But here is the most important point. Look at this. Zero correlation between three strategies. So the ES and the VIX is just slightly, right? Remember, these are highly correlated markets, but the strategies are not. And NG just sits about zero. So this is like the perfect portfolio composition. And that is the overview of what I teach in the Algo Trading Masterclass, starting from matching the style to the strategy, build a robust strategy, combine them in a portfolio, trade that profitable portfolio. If you like this video, then most likely you will like the next video.